Hey, what's going on, everybody? Your man Omid here with you once again on a Monday to try to make sense of a completely discombobulated market. So hang in there with me. It's going to be short and sweet today. What's going on with the market? Mortgage-backed securities, guys, are just in a free fall. There's no better way to say it. As you can see, they've broken through all kinds of levels of support and ceilings of resistance, et cetera, et cetera. The trend meter kind of shows me here that mortgage-backed securities are severely oversold, so it should be a good time for them to come back in and buy. But to give you an idea what this has done in the last little while to the rates, well, it's kind of wreaked havoc. And now we're sitting at a 30-year fixed at 7% on the average rate, with 20% down in 740 credit scores. Jumbos are around 7.1, and the VA is sitting around 6.5. To put that in perspective of where things were, not just last week, but this is interesting, from 9:30, from September 30th, we were at 6.21. So we've gone up 80 basis points in this amount of time. And so the market volatility right now is maddening because there's no real big reason behind it other than the fact that the economic indicators are showing that we have a healthier marketplace than what the bond market feels like we do, right? Employment numbers are coming in more solid, jobs, unemployment numbers are coming in lower. Not a whole lot's making sense, but this is why we get what we get. Okay. Super quick here. I've color coded these for you to make it a little bit easier to understand what's going to pop this week. So the JOLTS report, which is job opening labor turnover statistics. So it measures how much job hopping people are doing, and that's indicative of the health of the employment environment, which is important. Case-Shiller Home Price Index, FHA Home Price Index, they're going to tell us the same thing. Real estate values are up. We all know that. ADP employment report that takes and processes 250 million payrolls in the US. That's going to show us how many jobs were created. Q3 GDP, gross domestic product. This is the first read to show you how much of what kind of production we're having as a country, if you will. PCE, which is the personal consumption expenditure. So many acronyms, I know. This is the Federal Reserve's favorite way of measuring inflation. That comes out on Thursday. Initial jobless claims comes out on Thursday, as well as the first-time filers for unemployment benefits. And then, dun, 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 the BLS jobs report, the granddaddy of all of it, is going to come out on Friday. So any of these things, if they show up weaker than expected, good for bonds, good for rates. If they come up stronger than expected, bad for bonds, bad for rates. So lots of news and movements starting October 29th and ending right at the election, I think. So we'll see what this week does for us. As always, please do like and subscribe and share this with someone who's in the market or he needs to learn about these things. And as always, we're just a phone call away for you. Okay? Talk with you soon. Bye-bye.